about PayFacs for a second. So if you think about PayFacs, I want you to think about a payment facilitator, and I want to really talk about the PayFac model and see how you can benefit from it or how you can use it to your advantage. Okay, so let me first define for you what a payment facilitator really is and what it is not. Okay, so basically, if you think about a payment facilitator, I want you to think about a payment service provider for merchant. So what happens here is that you have a company that allows its customers to accept electronic payments using the payment facilitators platform. Okay. So if you think about a payment facilitator platform, you're thinking about Square, Stripe, Stacks, or PayPal. Okay. So if you think about a payment facilitator, think about a payment service provider for merchant. Okay. Now, this account types, when it comes to payment facilitators, you have different types of PayFacs or payment facilitators. Okay. But the cool thing is that this account types aggregate funds across many merchants in a pooled account. Okay. So you don't have a single account, you have a pooled account. So pooled account means that you have different sources of funds actually flowing in through that account. So payment facilitators provide online processing services for accepting digital payments by a variety of payment methods, including credit cards, debit cards, you have gift cards, you have bank transfers, you have EMV chip cards, and you also have real-time bank transfers based on online banking. So this is kind of cool in terms of flexibility once again. And PayFacs simplify the enrollment process by creating a sub-merchant account, thus cutting down the approval process for a merchant account. Now, instead of 2 weeks, what happens here is that you have maybe you have 2 days or 1 day, okay, for approval, okay. And for software companies who have chosen to become a payment facilitator, owning the payment functionality not only gives them a new revenue stream, but also enables them to manage payments as a key piece of their customers' experiences. So this is really good from an affordability point of view too. So using a facilitator to monetize payments within your existing website and systems gives both your users and their customers a seamless user experience. So the UX becomes very streamlined. So payments technology is actually embedded straight within your software infrastructure, giving both software solution providers and their customers a seamless UX. Okay, so sub merchants will be able to more efficiently manage their businesses, while their customers will enjoy an easier way to pay. So this is really good. This is a win-win across the board, by the way. Now, let me really explain to you. I want to go a little more granular here when it comes to payment facilitators. And I want to explain how those platforms really work, so you have a clear idea about what kind of value added is actually put into the equation. Okay, so opening a traditional merchant account typically involves going through an arduous process to get your merchant ID. So a payment facilitator, on the other hand, greatly simplifies the process of opening an account, okay, by providing sub-merchant accounts to retailers, so they don't need to apply for a merchant ID in the first place, okay. So that's really good because you have time saved. You have lots of time saved. Essentially, the PayFac has a master merchant account through its relationship with acquiring banks. So this allows them to sign up sub merchants and run their transactions under the master merchant ID. Thus, merchants don't need to go through a lengthy underwriting process and can be onboarded, okay, a lot quicker compared to traditional merchant accounts providers. So this is, again, you are saving a lot of time there, okay. Now, what does a PayFac really do? If you think about PayFac, I want you to think about three primary types of activities that a PayFac does. So a PayFac gets into a contract with an acquiring bank to take payments on behalf of its merchants. The acquirer issues the master merchant account that the PayFac uses to accept all payments for the sub merchants. So you have an extra layer of accountability there. And the PayFac directs the funds from the buyer to the sub merchant account. So you, as a sub merchant account holder, you'll get your cash anywhere. Okay. In short, the PayFac controls the flow of funds and assumes responsibility for paying out funds to merchants directly. So if you think about a PayFac, you might want to think about a payment processor, but also an independent sales organization. So I just want to explain to you what the difference really is between those three platforms: a payment facilitator, a payment processor, and an independent sales organization, an ISO. So, at a glance, a facilitator, a processor, and an ISO may seem to be similar, but the differences are kind of notable. Let me break it down for you. First of all, let's talk about PayFac versus payment processors. So, payment processors do exactly what the name says, okay? They provide the systems and technology that process transactions. So, if you have a payment processor, you have a platform that processes transactions, okay? No more, no less. And so, basically, a payment, let's say a payment processor is typically a standalone service, okay? So, payment processors are required to maintain PCI DSS compliance, so payment card industry data security standards compliance. That's an important protocol when it comes to security, and they have to actually maintain that compliance. And also, many also provide payment terminals and various security solutions. So when you are looking to embed payment services into your platform, you likely won't work with a processor directly. Instead, you will work with a third party that resells the payment processor's offerings. And this leads us to ISOs. So ISOs, once again, you're looking at independent sales organizations, okay? So ISOs actually serve as the middleman between the sponsor bank and the merchant. And the ISO is tasked with facilitating the relationship between the two parties and getting merchants signed up with a merchant account. So what ISOs do is that they try to really do a little bit of due diligence for the primary merchant bank. Okay, so that there is no sort of surprise, no negative surprise. Okay, so you can mitigate the risk. So a facilitator, on the other hand, creates a more streamlined path to electronic payment acceptance for small and medium-sized businesses. So in a traditional onboarding model, a merchant must first apply for a merchant ID through the ISO and sign a direct agreement with the sponsoring bank. So this is something to really think about. So with a PayFac model, the facilitator already has a bank relationship, allowing you to work with them instead of the bank. So it's easier, if you think about it, to get approved. So the sign-up process is easier as it is usually fairly automated. Typically, PayFac is a service or a software you are already using. So the most impactful difference for your users is cutting down the time waiting for underwriting to sign off on as a new merchant bank account. So instead of waiting for days to be approved to start taking payments, your users will be up and running in hours. So that's really good. Let me expound on that when I say what are the benefits of using a payment facilitator this year. Well, you do have lots of facilities. You know, you have lots of goodies happening here if you're using a payment facilitator. So payment facilitation allows a platform to instantly onboard new users and enables also payment acceptance as soon as 15 to 30 minutes from the submission of the application. So you can see that you have a pretty fast process here. Okay. So in addition to streamlining the enrollment and onboarding process, a payment facilitator offers additional payment processing benefits to sub merchants, including seamless payment integration solutions. So you have lots of flexibility there. Okay, so the benefits of using a facilitator include the ability to enable all major card networks and types. So you have everybody. You have Visa, MasterCard, Discover, Amex, all of them, okay, onboarded. You also have ACH, e-check, and even electronic bill payment presentment through one interface. So having a transparent, easy to understand fee structure further encourages businesses to sign up with a payment facilitator because it does something great in the sense that it eliminates any surprise charges and gives merchants the ability to manage their budgets more easily. Okay, So this is kind of cool. So based on experience, I've seen that PayFacs are particularly great for small businesses because they can eliminate a lot of headaches related to your KYC requirements, your AML regulations, regulatory compliance, underwriting, and application processing. So this is really good. So additional benefits for using a PayFac include the fact that you have a rapid and hassle-free onboarding process. Okay, and the PayFac manages who is approved on the platform. So this is a big time saver, really. If you think about it, the facilitator enters into a direct agreement with the bank. So as a sub merchant, you're not locked into a contract with the bank's terms. This gives the PayFac greater flexibility in managing their sub merchant accounts. So this is really good. So another benefits when it comes to using a payment facilitator, basically you are able to open a new pillar of revenue for your business in addition to having added value for your platform. So when I say opening a new pillar of revenue for your business, basically that's what I usually talk about on this channel. You have several avenues for revenue, right? And in this case, you are opening a new avenue for revenue. So you will enjoy more revenue opportunities with the payment facilitator. With an ISO, the acquiring bank takes a share of the revenue, so it's split three ways. But with a PayFac, you will generate more revenue from the opportunity because the acquiring bank is no longer in the equation, right? So you have two people instead of three. So this leaves a larger share of revenue between you and the payment facilitator. The ability to earn more money from network and transactional fees, and potentially float a much larger amount of money for a much longer time is a benefit that helps the sub merchant with cash flow, right? So your cash inflows will go up. So when I say added value for your platform, if you think about it, you want to have flexibility on your platform. So PayFacs add value to your platform for your users. The integration between software and payments has opened up additional opportunities such as EMV, mobile payment options, and contactless payment solutions. So there are also opportunities for NFC, so near field communication based loyalty programs, providing an overall enhanced customer experience thanks to this digital payment tools. So this is kind of cool. So the ability to integrate these payment functions directly into your platform not only allows you to have greater control over your clients and to end user experience, but you're also able to leverage simple and transparent flat rate pricing structures. You can access seamless integrations and cutting edge technology, and you can eliminate the need to use a separate payment software solution. So this is really good from a flexibility point of view. So if you think about a PayFac, how do you solve payment challenges? Okay, because the thing is that the bottom line is you want to have a seamless payment solution, right? So an alternate payment facilitation model would be a SaaS provider with a web-based payments component. Okay, so this is kind of cool, especially if you have a solution that allows you to have a suite of features with embedded payment processing and reconciliation all in one place. That way, you can save money. You can also integrate and embed payments in as little as 30 days at a minimal, like for a minimal cost. Your business will have access to an award-winning support team and a dedicated partner success manager who can manage payment implementation and operations for you. Okay, so this is kind of important. So, and you also want to really be careful in terms of solving the payment facilitation equation, whereas you can process, for instance, card present transactions and card not present transactions in a single solution. Okay, and so you can use a portal to provide full reporting transparency right out of the box. You want to have that transparency. So basically, you have card present payments where you're simplifying how you swipe, dip, and tap credit cards and accept contactless mobile transactions. You want a solution that is very easy to integrate in terms of API, so you can enhance your technology infrastructure with a customizable, feature-rich payments integration. You have QuickBooks Online two-way sync, so you can auto sync invoices, catalog items, customer data, and payments between basically the platform and QuickBooks Online. You have e-commerce solutions. Okay. You have business analytics. What I'm telling you, a lot of payment providers do provide that on the market. Okay. You just have to do a little bit of research or just let me know in the comment section and I'll just direct you. You also want to have a virtual terminal component. So you want to complement card present payments and extend your ability to accept compensation anytime, anywhere on any device. Okay, and this is actually pretty good from a scalability point of view. So if you think about a payment facilitator, just remember that basically this is just a service provider that enables merchants such as you and me to process transactions. Okay, and so those payment facilitators, those PayFacs, white label payment processing services and help sub merchants process transactions using their master merchant account. So the PayFac model was created to streamline the processing of payments without additional steps or solution. Okay, so this is kind of important. And what one thing I want to say here is that you got to really think about the one that works for you. So if you think about a payment facilitator, I want you to think about Stripe, Square. I want you to think about PayPal, among others. I want you to think about Stacks, among others. Okay, you just have to make sure that whoever you choose as your payment facilitator, he or she, I mean that organization has the proper integrations in place to connect with to your systems like seamlessly. That way you don't have to waste time. You don't have to ask yourself whether or not you can really integrate here. Okay. And now there is actually a big difference between a traditional merchant account and a sub merchant account under a PayFac. Basically, what happens here is that in a traditional merchant account, the merchant typically has to go through a lengthy process of acquiring a merchant ID, so to accept transactions and also accept payments too. On the contrary, on the contrary, with a sub merchant account under a PayFac, the merchant doesn't need to apply for an MID. The PayFac uses its master merchant account to facilitate transactions for its sub merchants. So you have lots of flexibility there. Okay. And one thing I want to say here is that basically you are able to get things done real fast. Okay. Just remember that using a PayFac offers benefits such as rapid onboarding of merchants. So you are able to onboard real fast, managing approved parties on the platform, new revenue opportunities, and added value for the merchant's platform. So your platform is going to add lots of value in terms of reducing your customers' pain points, or at least reducing them or eliminating them altogether. So PayFacs also provide additional services like fraud prevention and chargeback management and easy to understand fee structures, making this whole thing very, very easy and beneficial choice for small businesses. And so, in conclusion to this conversation, I spoke to you about PayFacs. I defined what a PayFac is. I talk about the benefits, what PayFac does. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.